May we have your attention, please? The session is about to begin. Please take your seat.
Good morning, everybody. Welcome to day 2 of CERAweek, and greetings to you all here on level 2 of the Hilton Americas, and also to all of you on level 4 in the ballroom up there. I'm very pleased to welcome back Darren Woods to CERAweek. Good morning, Darren.
Good morning, Dan. Thank you.
Have you here. And I thought we'd get started by just talking about what the lessons of the last 18 months of tumult have been.
Yeah, well, maybe just start with what it reminded everybody of, which is the importance that the global energy system plays in a vibrant economy and in maintaining people's lifestyles. I think we saw, and what was demonstrated during the energy crisis that we've been going through and the challenges in Europe, is how quickly, when forced to prioritize between growing the economy or supporting the economy and supporting people's needs for energy, that we abandoned climate objectives. And we saw that in Europe as they went back to burn more coal. And I think the lesson there for us is to make sure that as we move forward, we have policies that strike the right balance, that continue to manage all the dimensions of our energy needs and provide affordable and reliable power to people all around the world, and at the same time, find ways to reduce emissions and reduce emissions quickly. And I think it is an and equation that we can do both of those things,
right.
But policy needs to be structured to support that.
Right. And as you deal with policymakers in Europe and other parts of the world, do you find energy security is something that's now much more center of their minds?
Yeah, absolutely. I think, it was hard not to bring that to the forefront as a priority. But I would say that it would be a mistake to then over-concentrate or index on the security aspect. It really is around trying to address all aspects of our energy system and strike the right balance. So national security is absolutely an important thing. Continuing to support and drive economic growth is an important thing. Continuing to lift people out of energy poverty is an important thing. Reducing emissions and reducing emissions intensity is an important thing. We got to stay focused on all those. Right. And I think it'd be a mistake to abandon any one of those objectives in light of what's happened. But it's got to comprehend all of those variables.
I mean, one thing you have talked about, expressed concern about, is there sufficient investment going into oil and gas?
Yeah, I would tell you back in 2018 when we unveiled our strategy and spent time talking about it, we recognized then that the industry was underinvesting. It's a depletion business. Most people often forget that every barrel or ton of gas that's produced is that much less available for the future. So the industry has to continue to invest, and we saw in 2018, particularly with a lot of the climate emphasis, that people were pulling back from that. We leaned in. We were heavily criticized for doing that at the time, but we recognized at some point that supply was going to be needed, and we wanted to make sure we were there to provide it. And in fact, that's what has really led to our success here over the last couple of years, is the investments that we continue to make starting in 2018 forward Even during the pandemic, when we lost $20 billion, we invested $17 billion.
That took a little courage.
That took some a balance, I would say. But we were then ready when the demand was there.
Right. And I mean, I think people do forget there is a depletion that goes on every year that has to be fixed. You get a continual education in public policy, and you can, I think at this point, and comparative government could do a contrast between European policies and U.S. policies in terms of dealing with the crisis over the last 12 months, and be very interested. Windfall profits tax versus the IRA.
Yeah, I think you maybe can very simply describe it as carrots versus sticks. I think, one of the challenges in trying to drive reduced emissions is we've got to create incentives for business to do that. I think as I talk about the different variables that you have to manage in the energy system, companies like ourselves have to manage across a number of different variables and commitments. We have obligations to generate a return from the shareholder monies, the money that we've been given to invest on behalf of shareholders. We have to generate a return from that. At the same time, we have to address the needs of society, be responsible players. And so it really is around how do you manage all those things. One of the challenges in reducing emissions is, one, the technology that the world needs to do that effectively across the span of emissions is not available today. So there's a lot of work that has to be done in terms of developing the technology. There's work that we can do in our own house around reducing our own emissions, which we're very focused on doing. And then there has to be incentives in the marketplace to make the very large investments that are required to help others reduce emissions. So we have started a low-carbon solutions business. We recently signed one of the world's largest contracts for storing CO2 for a third party, a customer. And we need incentives to do that, and the IRA has been very effective at that. Versus what, say, Europe has done, which is put punishing taxes in place.
Right.
And I would tell you the taxes that they've been talking about doing, if you look at our business, we're one of the largest refiners in Europe. We have been one of the few that have invested over the years several $billions in enhancing our refining footprint in Europe. And that profit tax that they brought through in Europe wiped out our years of our profit in refinery.
Right.
So I think, what in that case, what you're actually going to find is making the situation worse, and that less investment will flow, less supply will be available, yet the demand will continue to be there.
When you talk to governments and you point that out, do they hear you?
I think they hear. There's always this, I think, the balance that government has to strike between trying to appease kind of the narrative at the moment or the public in the moment versus thinking through what is the right long-term policy. And I think, I recognize they have a balance to strike there in terms of addressing maybe the more reactive, less thoughtful thinking at the time that's out in society versus the longer-term needs. They've got to strike a balance as well.
That does become a disincentive to investment.
It absolutely does. I can tell you that we certainly step back and reevaluate what we're doing in Europe.
Right. I've learned a new...
And just add to that, Dan, versus what we're doing here in the U.S., which is leaning in even more and trying to grow our business and address the emissions that the IRA is incentivizing us to reduce for third parties.
So that IRA is obviously very important for your strategies.
So our strategy is to basically do both. As I said, we believe it's an and equation. So we're going to continue to invest in traditional sources of energy and critical products that society needs. But we've also built our business to be flexible where we can invest in emissions reductions. And what we have focused on, people think of us as an energy company. We're actually a company that transforms molecules. And our emphasis has been transforming hydrogen and carbon molecules, referred to as hydrocarbons, and we're pretty good at it. We make chemical products as well as fuel products. This is an extension of those core capabilities to manage hydrogen and carbon, but do it to reduce emissions. And so we're taking the technology, our project expertise, our operating expertise, and applying that to this new sphere and providing customers with solutions to capture the carbon and then to store it permanently underground.
Right. And that's your low-carbon solutions.
That's our low-carbon solutions.
So you're spending $17 billion, at least budget, over the next few years. What are you going to spend it on mainly?
So I think, the market is very nascent at this point in time. And so I would tell you, as we've gone out to develop that market, it's such an early stage. There is a lot of noise in there and a lot of difficulty in terms of laying that value chain out. You've got to kind of start where the emissions are, capture those emissions, transport them, store them. So you've got to piece together elements of that value chain, which today don't really exist in its entirety. And so Where we're at right now is about 60% of that $17 billion is focused on reducing our own emissions, which we've got a lot more control over and can bring in carbon capture, can bring in hydrogen production to change out our fuels and reduce our emissions. And then about 40% is reducing others' emissions. So bringing those capabilities to customers out there to help them do what they can't, but what they want to do.
Right. And so in the Permian, where I think your target is 1 million barrels a day, but you also have a target of net zero.
Yeah, so we set a target of net zero in the Permian by 2030. And one of the points in doing that is to demonstrate to the world that we can do both. Permian is one of our fastest growing production areas, and we are also reducing emissions the quickest. We this year actually got to zero routine flaring, and we are on track to get to a net zero position in the Permian by 2030 while we grow production and get to 1 million barrels a day.
How hard is it to do that?
It takes good engineering and a plan. I think, one of the things people ask me about, well, what should governments around the world be thinking about in trying to address this emissions challenge? And, first I say you got to do the math because this is a hard problem to solve. You need to understand it. And then you got to develop a plan, long-term plan, that lays out the steps that you can then execute to strike that right balance and get to zero. That's what our organization is pretty good at doing, and that's what we're doing in the Permian. I would add, we're looking at this from a value chain standpoint. So we grow the Permian production, we decarbonize it while we're doing it. We have pipeline systems that we've invested in over the years, and we will make sure that those systems are tight with no leakage. And now we're in the process. We just announced a FEED or engineering on a big project in Baytown to decarbonize our chemical plant there, or to start the decarbonization process. So you can envision at a time piecing together from the wellhead all the way through to our customers a zero carbon value chain to provide products to customers.
Right.
And we are working on that solution as we move forward.
Right. So we worked together. You led the studies that we did for the National Petroleum Council, for the Secretary of Energy, of which emissions is a big part. And I think one thing that you've carried away from that is the need to think differently about Scope 3 versus life cycle emissions. And I think you think life cycles is a better way to go than Scope 3.
Well, I think, if you look at where we're at, frankly, we're all learning in this space. I think governments are learning, companies and businesses are learning. And I think what we saw in Europe should be a wake-up call in terms of making sure we understand the implications of the decisions that we're making, thinking through long-term how to strike this balance, as I've been talking about. One of the challenges is, and I think it's important to have metrics and measures in place that allow us to gauge and measure and hold companies accountable for meeting the needs of society, but doing it in less emission-intensive ways. I think that's an important objective, and we subscribe to that. You got to have the right measures to do that, to make sure you don't have unintended consequences. I think the GHG protocol, Scope 1, Scope 2, Scope 3, is a good protocol when used appropriately. I tend to think about the Scope 3 measure for the GHG protocols as relevant at a macro level. If you're trying to understand across an economy for a country, what are your sources of emissions? What do you need to do to address those emissions? I think those are really good measures to get a comprehensive understanding of where they're coming from. Applying that to a specific company, a Scope 3 target on a specific company, has significant downsides. And I'll give you just a few examples of that for our company. We make LNG. We're growing our LNG business. Every ton of LNG that we produce backs out coal somewhere in the world. The globe benefits from that backing out. So as we're working on the technologies to transition, in the meantime, we've got to get cleaner sources of fuel out there. We can do that with gas. If I have a Scope 3 target and try to limit my Scope 3 emissions, that means I make less gas. That means somebody else supplies coal out there and emissions for the world goes up. Another example, if you look at our refining network, it's benchmarked through a survey called Solomon. We are one of the least emissions-intensive refiners in the world. As long as there's demand for gasoline and diesel, making them in our refinery is a benefit versus others who have higher emission footprints. So asking us to stop investing or producing diesel and gas, gasoline, which continue to be demanded by society, just means that somebody else out there who's less efficient, more emissions intensive, will meet that demand, make that gasoline and diesel. And again, the world does not benefit from that. One final point on that. As I said, we're going into the carbon capture and storage business. The work that we're doing in that space, helping others reduce their emissions, isn't recognized by Scope 3 measures. So the more work that I do to help others offset their emissions and store that, the more emissions I generate and the more that disincentivizes me from doing that. So there are issues with that. Having said that, we need a measure that does appropriately affect the efforts that we're putting in place to reduce emissions. And I think they're available to us. Life cycle emissions, emissions intensity, there are metrics that are available that we're working with the broader community with to see if we can advance some of those concepts.
Do you find that there is a broader dialogue going on about?
I think there's a willingness to open the aperture, recognizing how early we are on, how urgent the issue is, and how early we're on this transition, and how enormous the lift is.
Right.
It is going to take, I think, and hopefully people are beginning to recognize multi-party, government, public companies, and I would tell you the oil and gas industry engaged in figuring out how we solve this problem. And so I do think there is some receptiveness to it. There is still a very vocal, what I believe to be minority of ideologues who have jumped from the problem statement, which is reducing emissions, to the problem statement of getting rid of oil and gas. Those are two very different problem statements. We've got to stay focused on the fact that emissions is the issue that the world needs to address. And it's the burning of oil and gas and the combustions and the emissions associated with that combustion, which is what we have to address. And it can be done. That's why I think people are talking about carbon capture and storage as an important aspect of emissions reduction, which for those hard to decarbonize industry, capture the emissions and sequester them without destroying your economies, without wiping out your industrial processes, without backing out of hundreds of years of investment in power generation. So I think, in some cases you stop using oil and gas, and other places you deal with the issues associated with using oil and gas. It needs to be a little more sophisticated, our approach across the world. And it will vary, the solutions that we implement will vary around the world depending on the circumstances you find yourself in around the world. The answer in Africa and some other developing nations will be different than the answers, say, in Europe, which will be different than the answers that we have here in the U.S. That's okay as long as we stay focused on the problem statement, which is reducing these emissions.
Right. Well, I think in terms of reducing emissions, we were talking before about the age of mega projects, and we tend to think of mega projects as oil and gas, but of course you're doing it in the low carbon area mega projects as well. Yeah, well, I think one of the things that we as a company have built a capability in is mega projects. We do very large projects all around the world. We've got them certainly in our oil business with what we're doing in Guyana, and maybe contrary to what the common perception is, what we're doing in the Permian is actually a mega project, in that we've approached that as a single project around developing a manufacturing process in the Permian to produce, to grow our production there and reduce our emissions. We've got large mega projects in the gas business in Papua New Guinea, in Mozambique, to name a couple. We've got a big one in the Gulf Coast that we're working on. And then we're also got mega projects in our low carbon solutions business. We announced the Baytown hydrogen project. That'll be the world's largest hydrogen plant, a large CCUS with that, an ammonia plant with that, so that we can decarbonize our operations, provide hydrogen to fuel local transportation, and provide ammonia to transport low-carbon fuels around the world. So that is a mega project in the low-carbon solutions business. So let me ask you, mega project, you did mention Guyana. I mean, that's pretty incredible how fast that's developed. Yes, it is. Thank you, Dan. No, we call that execution. I think, if you look at that, that's really a story of success. And I would also tell you that we are very focused as we grow that production. We brought that line from discovery to first production in 5 years, which is, if not an industry record, pretty close to it. When you think about what typically, the time frame typically taken by industry, it's about 10 years. If you then look at what we've delivered since that time frame, we are bringing in those ships in that production ahead of schedule. Right. We've beaten schedule for the 2 ships that we've got, and the 3rd one that we're working on, we expect to beat schedule. Running production at a higher level than we had anticipated when we made those investments, and staying focused on helping reduce the emissions,
And we've got a project that we're working with the government of Guyana to bring gas onshore, back out some of their less efficient, higher emissions intensity power, substitute that with gas. So we lower emissions, get better, more reliable power to the people of Guyana. That's a real win-win solution.
Yeah. So going to the other mega project you mentioned, as you pointed out, ExxonMobil is actually a molecule company. Hydrogen, where are we in hydrogen? Is it going to take 2 or 3 years to establish what its role will be? Do we know what its role is going to be, or is it?
So you're talking about blue, I guess blue and green hydrogen,
yeah.
More specifically. Yeah, and I think, to me, first of all, what I would say here in the U.S., the IRA has certainly incentivized that. I think one of the advantages, we're kind of color agnostic. If I come back to forget all the labels and the colors, just focus on the emissions and the emissions intensity. I think the IRA is constructed around emissions intensities, but with a flavoring of the color behind that emissions intensity. But that's okay. We're focused on, can we produce that hydrogen and meet those emissions intensity levels, which I think is actually what we want companies to do. So I think, that's going to incentivize hydrogen here in the U.S., which is a good thing. But the market for hydrogen and people's willingness to pay a premium for low emissions fuels, I think, hasn't quite taken off yet. I know in talking to a number of our partners around the world, they're having a hard time in terms of selling into Europe, Asia, blue or green hydrogen, because there's a cost associated with versus existing hydrogen sources. So I think that's got a ways to go yet.
Right. Please join me in thanking Darren Woods for joining us this morning. Thank you.
Please remain seated. The program will continue momentarily.